Taking a look at BlackBerry stock, this will be the overall play for the time being for BlackBerry stock, continuing with this overall cycle with bouncing off the support level in December of 2020, January 2021, went up to the upside, hit resistance in January 2021, came down, bounced off support in May of 2021 as well, right here, twice you could hopefully see, went up to the upside, hit resistance in June of 2021, and then hypothetically was coming back down, formed a channel, all that stuff, etc., etc. Now, the reason why we ended up with the recent developments is we are tied up with GameStop and AMC as original three for Wall Street bets overall. GameStop and AMC ran up 20 to 30%, so naturally we'll run up as well, ran up almost 10%. Reason why we didn't have the same run up is because GameStop and AMC are more shorted in terms of extremely shorted territory. They might not be for the time being, or they might be considering naked shorts or not, if you want to account for those or not account for them. But BlackBerry stock is more of a heavily shorted, not extremely shorted territory. So that is the reason why it didn't have more of a run up, but BlackBerry is a fundamentals play. That's why Wall Street Bets does like BlackBerry stock overall. Now, if it were to spike up right now to continue this cycle, it will hypothetically get knocked down to $14.72. But if you want to count for false breakouts, which I would personally, you're looking at $15 price point clean. That is a horizontal resistance level as well. What I mean by that is if you look right here horizontally, there's resistance at roughly, when I checked it, it was at $12.38, $12.37, $12.36. You could see right here horizontally twice when it went up, got knocked down, came back, went back up, got knocked down as well. So the price points that it needs to hit, actually before I say that, so that $15 is a horizontal resistance level. So when it passes, it might pass 1472, 1475 with this downward trend resistance line, but it probably will get knocked down most likely with a strong horizontal resistance level at the $15 price point. And I'll explain why as well, why we'll get knocked down $15 price point and why potentially might not get knocked down as well. So there's a little bit of a play of the Federal Reserve, and we'll explain that with the overall market, and then potentially with the MACD lines with this chart graph and BlackBerry fundamentals with earnings with the potential patent sale as well. Now, before it gets to that price point, right now we passed this channel, which was predominantly $11 price point resistance level, passed it with $11.10 right now. Next level is $11.33, $11.34, which we had issues today, but after hours it's at $11.50, which is the next resistance level. $11.50 range, $11.61, around that price point is quite a bit of resistance. Then we have $11.83 resistance level. Then you have the $12 in essence, but I would say more predominantly the $12.36, $12.37, $12.38 price point. Yes, there is resistance at $12.26 as well, but you most likely would focus around the $12.30 range to $12.40. Then you have resistance at $12.50. After that, you have resistance at $13, $13.35. I'm just mentioning horizontal resistance levels. So $13.35, I think from $13 to all the way to $13.93, $13.94 will be quite quick to go up. Like even all the resistance levels that I mentioned might be quick, where it's just going to spike up based off the volumes that we're potentially going to see tomorrow, because you can see the volume uptick right now. So it's been pretty much stable, and then right now as of recent, the uptick right now. So all the way up to $13.93, $13.94, that is going to be quite difficult to pass the $14 price point, essentially the clean $14 price point. It could be the low $14 price point, but you'll see it'll probably hover $14 for quite a while, and then essentially uptick to the $14.75, $14.72, $15 price point. If we pass $15, I'd be quite impressed, because then more is coming, and I'll explain why as well. Let me go to it right now actually. So the 1 year chart right about here, if you see, right here indicates is an MACD line, indicates if it's a bearish or bullish movement. Right now it is optimistic, it is bullish, and it's optimistic, indicating a potential run up. The only thing is though, take this with a grain of salt, because the 1 year chart moves with a couple of trading days. So like we've seen before, where it was in the positive, it didn't really do much, to be honest, and then it's coming back up again. I'm more putting faith in the 5 year chart, which right here, it has an uptick, plus the bars are becoming a lighter shade red and smaller, which I've showed in the past. It doesn't have to cross over to the positive to indicate that there's, or not indicate, like you could enter before it crosses over to bullish territory, because right now it's in the negative, it's bearish, it's not optimistic. But you could buy it before it becomes bullish. And right here, we were at the bottom before it crossed over to the bullish, and it was the perfect time to enter before the run up. Now, the thing is though, you could be trapped a little bit, because it could become a lighter shade of red, like we saw here, where it ran up a little bit. This is the 5 year chart, so keep in mind everything gets compressed in terms of price points, so it might not look significant, but it was a little bit of an uptick, at least in terms of price points. And then it came back down with another solid red. And then it went up with becoming a lighter shades of red. I'd say a better indication is the smaller bars, which is what we have right now, plus combined with the uptick and all stuff, all awesome stuff. Now, one reason why you might potentially get knocked down overall at the $15 price point. First of all, not only is it a resistance level with the overall stuff. Actually, wait, before one thing, if you look at the 5-year chart, by the way, one reason why you might also want to enter is this upward trend support line is for the 3-month chart. But if you could almost imagine it as being a 5-year clean horizontal upward trend support line, which is not really at the moment, but it came down, bounced off support, went up to the upside, came down, almost bounced off support, went up to the upside, and then bounced off again. So potentially you could look at it that way, but that's more for the macro. For the micro, if you look at the 3-month chart, potentially it could always come back down. But because of the recent developments, I would say it's most likely going to happen after earnings, and more predominantly if the patent sale weren't to come out the next earnings, which is the end of September, and the earnings is just okay, which is kind of expected to be okay, but if it's a little bit less than expected, then I can see it coming back down to support level just to visually show. Let's just say it doesn't really go that high, whatever, and then comes back down, bounce off support level at like, I would say most likely what I timed, it was like $9.80 and goes up to the upside later on. But I digress. This is more of the micro where it potentially could come back down later on. Doesn't have to exactly. Now, given all those developments, that's the reason why it could go up to those price points. But the reason why it potentially could come back down essentially is before earnings though. So what I want to say is, let's just say it goes up to the $15 price point like I mentioned with a downward trend resistance line, and then it comes down before earnings. So $15 comes down before earnings is because next Thursday, I think the Feds are having the meeting, the Federal Reserves, and that is important because they're going to be talking about tapering. And if you look at the S&P 500, the S&P 500 encompasses pretty much for the most part the 500 companies on traded on the U.S. stock exchange with biggest U.S. companies. So this is a representation of the market for the most part, I would say. There's a channel right here that's formed ever since 2008, 2009, and you can see these two lines act as support. Maybe sometimes there was resistance, I haven't double checked actually, but support for the most part when they came down, bounced off, came down, bounced off. But this line right here is the resistance line. And you can see like there's a bunch of times we could not pass it. Even in 2013 to 2015, could not pass it. That does not mean you're not going to be going up. You can see it's still an upward trajectory. It's just quite difficult to pass where you'll see pullbacks at times. Not necessarily guaranteed all the time, but you could see quite a bit of pullbacks. And I think because next Thursday they'll be talking about tapering and all that stuff, then there's a chance we could see a dip. How much of a dip? It's debatable. I think potentially anywhere between 3 to 5% is possible. Most likely I'm expecting 1 to 2% pullback, which won't be significant for what I'm talking about right now. But if it is a 5% pullback or a 10% pullback, I don't think it'll be 10%, but if it is anywhere between like 5% would be significant. Where for BlackBerry, if you go back to the 3-month chart right about here, and if it hits that $15 price point and time for Thursday and all stuff, then we could see that drop where it'll probably test the support levels, which I probably should have checked. I apologize, but I'll post a future video what the support levels could be. But that's what could be potentially play. But then when earnings comes up with a potential patent sale, which is not a guarantee to come out this earnings, which is the end of September, I still have to post that video explaining why potentially there's a small chance based off the conference call from the March release date in terms of 2020, where it could come out next earnings after September, which is in this end of December. Then either way, I digress. If the anticipation that it's going to come out this September, even if it's coming down because of tapering and all stuff in the market pulled down, we could come back up just before earnings or during earnings to test the downward trend resistance line to break through it again to have that run up. So those are the levels. That's everything. Hopefully I mentioned everything. I feel like I'm forgetting something, but if you have any questions, do not hesitate to ask. I'm trying to answer them as soon as possible. If you like the video, consider dropping a like. It does help with the channel, so thank you so much for that. Appreciate it. If you like videos like this or other financial videos, other stock videos, consider subscribing so you'll be notified when I do upload those videos. And that's basically it. Thanks again for watching, and I'll see you next video. Peace.